Hey everyone, this is Andrew Berman coming you from NMP TV. You are watching Mortgage Leadership Outlook, where we meet with some of the biggest leaders in the mortgage industry, talk about what's going on. The genesis of this as earlier this year, as COVID-19 hit, and our world was rocked. We went to some of the biggest leaders in the mortgage industry to talk about what was going on in this world. So today's guest, so excited to have my good buddy, Shah Tehrany, who is the president and CEO, Madison Mortgage Services. Shah, thank you so much for joining us today.
Yeah, thanks for having me. It's fun to be here.
So here's why I had Shah on today. So Shah is a mortgage broker who's by the way, he's like 5 minutes from my studio / house here on Long Island. But Shah is a really interesting story. Shah worked for, and you could add to this if you want, but Shah worked for a large retail mortgage banker, was a top producer, consistently, the top of the organization at a large mortgage bank. And years ago, I remember he would kind of say, "Hey, what about this broker world? Tell me a little bit about this broker world." And I want to talk a little bit about the genesis of this, like what led you to say, "All right, something. It's time to take the bull by the horns, go out, create my own thing, and open up your mortgage brokerage." So talk a little bit about what led to that decision, Shah.
Yeah, my experience was great. I mean, I worked at a bank in Long Island that was great. I mean, I spent 8 years there, and the owner is a gentleman and was always great to me and took good care of me. And I always had a lot of success there. But I was also sort of cognizant of what's going on in the broker world. And I think, Andrew, when we first sort of connected, a lot of it was around you were sort of helping me to maybe vet and evaluate maybe buying a banker, which was something I was looking at carefully. And there was a lot of concerns around that and legacy issues, and wasn't such an easy thing to tackle. So the next progression was to look at the broker world, right? Because that was sort of the progression to banker, is like start broker and then maybe go banker when it's logical and when you scale it. So I started once I sort of learned about that environment, I sort of was forced to make a jump because the lender I was working with decided that they didn't want to be in the mortgage business anymore. They were gonna exit and sunset. So yeah, I got back like 4 days after my wedding, actually, and learned that, like, oh, by the way, the bank you worked at for 8 years no longer wishes to operate in the mortgage business. And so it was, I had a close friend. To be candid, I was already looking very seriously prior to that. I just didn't want to make a jump before my wedding. So, I'd met with quite a few banks. And been talking to them. And at the same time, a good friend of mine who's a gentleman in New York, his name is Brian Leibowitz, and he owned a brokerage for like 13 years. And he kind of made me an amazing offer and was like, "Come, jump over. It'll be great. We'll do some great things together. We can scale." And I told him, "Look, but before I jump in, I want to let you know I'm going to open my own brokerage. I want to have control of my tech stack. I want to have control of my process. I have a large branch already. I have a big group. I mean, we're 35 now, but at the time we were like 15, 20, and more operations and less originators specifically." So that's kind of what the progression was. And then it was, learning and getting the licensing and sort of going down that path and journey. New York is a challenging regulator, and they're very particular about who they let into the space, which is great. And at the same time, they were very thorough. My experience with getting my license was excellent, actually. A lot of people are like, "Oh, it's
in New York."
it was excellent. The banking department was so great. They were so detailed. They were so diligent. They were so careful about reviewing things properly. And then they would sort of come back and say, "Here's what we need." And I, promptly provided. So I would say anybody who's looking to open a brokerage, don't be scared of the New York State Banking Department. They're a great regulator. Right? They get a bad rap, I think, a little bit, and they're tougher maybe than others, but that's New York. New York's tough, man. That's how it goes here. So.
If you can make it here, you can make it anywhere.
Right. Exactly. So that was kind of my journey, and it's been a great one, and I just got my New York license in March. So it's crazy to think that, like, I got my license and then, it was COVID madness, right? So, or I should say we launched in March. My license actually it was conveyed at the beginning of February, but of course there was some time to bring that online, and we had to move offices and all that good stuff.
So listen, because going back with your journey, like, so you think about it, if there's anything you would have done differently, knowing that you went into this, if you say actually, when you made the decision, or I'm sorry, when the decision was made for you that it was time to actually, to leave the banker world and go over to the broker world, like, what would you have changed, or what would you have done actually slightly different?
The only thing I would have done differently, to be honest, is I would have done it sooner.
Wow.
Right. It's like I think I waited too long, and that I could have had a head start in terms of where I'm at now. But the experience has been wonderful, and the wholesale world is truly wonderful. It's different in a lot of ways, right? But you're not sort of capped in terms of what you can do and what lenders you have exposure to. Even though I send the majority of my loans to one lender, but it's been nothing shy of great. I wish I would have done it 5 years sooner.
Wow, that's amazing. So what does it do to you? Why do you feel that you're in a better place, now being a broker, than wish you did it sooner?
It's really two simple answers to that question. Number one is control. Right? Like being able to engineer your own process, being able to control, like our tech stack is, from Accelerate into Encompass Bankers Edition, being able to control every aspect of the process. My background is process engineering technology. That's what I'm good at. I was never like a sales guy. I just kind of got thrown into, figuring out how to sell loans, but I felt like I could, I wasn't really selling. I was just educating consumers about how the mortgage process works and what we can offer. But, the first reason was I just wanted to have more control and sort of steer my own ship, right? Be my own captain. Yeah. And number two was United Wholesale Mortgage. I mean, they changed the entire landscape of how I approached the business. I never viewed this business as truly scalable because all the bankers, like, let's be honest, New York is comprised of a lot of, super ultra big lenders, but there's a lot of these mid-tier, mid-sized, I should say, lenders that are in the $50 to $250 million monthly volume originations, right? Yep. And so it's comprised predominantly of that. And the problem is when you're at that level of scale, you can only have so much in terms of economies of scale. But when you're a UWM and you're writing 60, 70,000 loans a month, you're doing 30 billion a month. The economies of scales are enormous, and their tech stack is quite frankly disrupting the entire mortgage world. I don't even look at them as a mortgage company. I really look at them as a technology company. And so, so for a guy like me who's technically inclined and process, oriented, the ability to be able to close loans in a week and a half, 2 weeks, 10 days, 14 days, 16 days to, my closing turn time literally went down by 65%. Right. So I don't have to wait 60 days to close. I could close a purchase in 30 days easily with no reservations, with confidence. And generally it's we're ready and the other parties are not. Right. And so they really changed the game for me. Right. Having control and then meeting them and sort of integrating with them and figuring out, how incredible they are as a partner to brokers. And to me personally, just, that changed my life, man. It changed my life.
Wow, that's huge. So let's go dig a little into your history, because you're like you said, you didn't set out to be a mortgage banker or a mortgage broker. This is like, this is something you were a technology guy.
Yeah.
So before actually, we had Shah, the superstar mortgage originator. Tell us about, what was your life before that?
Yeah, so when I came out of school, I was in the technology services business. I joined, a big staffing firm. 9/11 happened kind of like the year that I came out. I graduated in 01. So I spent like all my summers, all my winter breaks, all my spring breaks working at Deutsche Bank, doing technology support. And so I knew the tech space really well. I knew the corporate environment. When 9/11 happened, they lost their major corporate headquarters in New York, and it was a recovery project for them. And I joined a staffing firm and quickly became the CIO there and started managing our largest account, which was like 90 consultants doing, technology work. And I was in my early 20s. I did that for a while, sort of exited that, had a liquidity event. And then I moved to Miami and started doing full-blown real estate development. That was always what I wanted to do, is real estate development. Wanted to build buildings, and that was always my focus. I was always very interested in the real estate space, but I had a background in tech, and I also studied finance at Boston University. So I went to Miami, had a lot of success, kind of got lucky, got out of some things before the market crashed. And I sort of fell into mortgages because one of my real estate development partners was big in the mortgage market down there. He was like a big broker. He did, he was record volume levels in Florida. He sort of introduced me and threw me into it. And he was like, here's the guideline book and figure it out. So I kind of did, man. I just started reading every day, reading all the guidelines, understanding the process. The tech was easy for me. Like I could run DU, LP. I was doing that the first week, right? So that's how I kind of got into it. I fell into it. I connected with some Long Island mortgage companies. Like New York was kind of a big mortgage mecca, 07, 08. The market had crashed. I was doing all great. I never did a stated income loan in my life. I was doing all full doc stuff. Sort of jumped into the business, started originating, and I was like, hey, this is great business. You can make a lot of money. You can do, you can scale the business. You can do, at the time I was doing like 4 or 5 loans a month. My first couple months out, I was like, I could do 10, I could do 15. So, and then I came up to New York, started working for, a retail shop, and, everybody was averaging 3, 4, 5 loans a month. I was doing 10, 12, 15, working nonstop, 15-hour days. I was there on Saturdays. I mean, I've always been a worker, and I sort of started to figure out like I could do this, and I need to position certain people in certain roles and have an LOA and have a processor, and started to engineer it. And other people, I think, realized like I had a good process. And some of the people I worked with started to join me. Actually, those people work with me on my team at my company now. Yeah. So people that from, 10 years ago, 12 years ago. So that's kind of how it evolved, man. That's I kind of fell into mortgages. I feel like I hear that story a lot, but it was attractive because it was interesting. Every transaction is something unique. I think it's great because you're really helping consumers and helping people and educating them, which is also why, by the way, I love the broker side of the world. The margins are a lot lower, and that's great. That means your consumer gets a better deal, right? Using an independent mortgage broker, and that's good for the world. It's good for consumers. It feels good to take care of people and do the right thing. And you get a ton of referrals as a result. Whereas I think some of the retail side of the business, the margins are a lot higher, especially in New York, and the clients aren't getting quite as good of a deal. And so, they're not as excited about the process. And I think that's why a lot of people, in New York are jumping over from retail into wholesales. They're starting to see that, that fact.
Yeah, I mean, listen. I mean, you have a local mortgage company. All your employees are local. So your sales, your processing staff, the entire company is all local. All the money's kept local. So I believe actually, independent mortgage companies are best actually for our communities. We're keeping the money locally. We're not sharing amongst shareholders that don't give a crap about our communities. So I think that's it says a lot about the independent model. And listen, most cases, the originators that you're working with are also playing softball with the kids, and so it's like they're part
not these days, but yeah. We're in the community. We're people live local, and we're getting friends and family, and local's a big part of it. I mean, we're also licensed in 10 other states, but we're definitely big on local and capturing local and taking care of our community.
So, Shah, what do you think holds back most originators from going to that that point where you started? Yeah. And you started touching on that, but if you can give a little more about the process that you defined to go from 4 to 5 loans to hit that 10 to 15 loans.
It's a great question, and I get it a lot, and I coach up a lot of LOs that are at other companies that we talk about. But if your question is just about how you scale your business as an LO. Specifically, I think it's really just around process, right? Like, how are you taking applications? How are you communicating with your borrowers? How are you deriving opportunities every day? So are you referral-based? Are you lead-based? How is your business engineered? And when I say that, I mean as an LO, like, what is your business model? And then what support staff is around you? And what type of organization are you at? Are they built for volume and for speed? Because speed cures a lot of those issues. and enables you to do a lot more. I have plenty of LOs that have joined us, and they're literally doing, like, within the first 60 days, they're doing double the amount of volume, triple the amount of volume. A lot of that's just speed and great process. Is someone disclosing for you? Is someone helping you get those loans submitted perfectly? And then are your processors communicating with your clients so that they're collecting the stipulations and you're not chasing stips? You're just focused on originating, and then you have an LOA and some good support staff around you. If you need more opportunities, you have leads. That's a lot around what we sort of do. Is we give, because I was a high level originator and I sort of know what it takes because I did it every day. I know how to build and engineer process and help my LOs to be able to achieve the same thing. The game is scale.
Yeah. So you talked about, your, the wholesale lender that kind of really helped you kind of get set up and help you actually, with some of your processes. How do you choose other wholesale lenders? Like, how do you choose other lenders actually, if a new wholesale lender comes on board, what does it take for them to be able to do business with Madison Originators?
Yeah, it's a great question. A lot of it's just around what their business strategy is, right? So, are they pro broker? Are they focused on brokers, and are they going to try and recapture those clients for us, or are they going to or are they using the wholesale channel to basically capture consumers, right? So, like, a great company in the retail space is that everybody knows, they just went public, is Quicken Loans, Rocket Mortgage, right? They're a phenomenal retail organization, right? They're the best, right? They're the best in the game, right? They also happen to do wholesale, and I'm not signed up with them because I just don't share their business philosophy, but I acknowledge that they're a great company, right? And so in terms of new lenders, I'm really selective, right? I'm really selective. I'm not chasing the 203Ks. I'm not chasing renovation. I'm not chasing co-ops. I'm not doing anything sub 640. I'm just not focused on that stuff. I want to go after the good loans, the clean loans where you can do a ton of volume. You make lower margins, you hook your clients up, and you make sure that they get a great deal and that they're super happy. It's all about experience. How do you construct an incredible experience, from stage 1 to stage 10, and then 6 months, 12 months, 18 months after, a year after, 2 years, 3 years, and so on and so forth. So that's where we're focused on. We're really not adding any more lenders. It's an unusual environment too with COVID. You have sort of still all these lenders dealing with the impact of COVID, and at the same time, record volume, record rates, right? And so everyone's having capacity issues, right? And so again, and not to be a UWM, cheerleader, but they're the only one that seems to be able to handle the capacity with speed. And so for me, that's the governing. It's not about price. It's not about like, oh, well, this lender will pay 25 basis points more for that loan, but hey, that lender takes 30 days to underwrite a loan. My primary lender does that in 2 days. So that's sort of the decision-making process for me.
Got it. So, and how many lenders are you signed on with? Just out of curiosity. 6. Wow, that's great. So relationships matter. Relationships. I mean,
it's all about relationship, right? Like, who's going to give you great service? Like, price is one variable that determines who you select, right? Like, if I send my loan to this lender, am I going to get a good experience as an originator? If I send this loan to this lender, can I have confidence that they're going to deliver for my client? Right? So am I going to be able to give my client a good experience, or am I going to compromise that because I want to try and make a couple more dollars? And so for us, we don't sort of make that decision, right? We sort of say client experience is first, commission is second, right? And so that's kind of where our focus is, and that model's worked for us.
Yeah.
Right.
So how do you extend that model for the customer experiences, while they're in the process? But listen, I know you talked about, retail mortgage bankers doing what they can to kind of build their base by having wholesale. But the reality is actually that our borrowers are under attack from everywhere. So they're seeing advertisements anywhere. They go to a mortgage calculator, and all of a sudden they're followed on Facebook and Google ads, just hitting them with offer. So what do you guys do to kind of keep in touch with the borrowers? Like how do you extend that customer experience beyond the close of that loan?
It's a great question, but a lot of that's just around your tech stack, right? Is like, because only so much communication you can do as a loan officer during the process and after the process. So we've automated a great deal of it, right? So that we make sure we're staying in front of our customers and communicating with them, making sure they're hearing from us so that if they have issues or if they need anything or if they need guidance, they can refer back to us. Hey, I need help with this, or hey, can you help me with my servicer? My taxes went up, $50 or something like that, right? So for us, it's really just about staying in touch and staying in front of our customers. I think to your point earlier about like when you pull credit on a consumer, it's like I think when the statistic that I most recently heard was like in a 30-day period, 7 lenders will contact that consumer and offer them services, whether it's phone call, email, direct mail, right? They're their existing servicer. Everyone's hitting them from all angles to get it, right? Maybe that number is a little lower now because capacity is constrained, but the truth is when consumers go out there to shop for a mortgage, they got a lot of options. The mortgages are fundamentally a commodity product, right? Mm-hmm. So at the end of the day, it's like we're not selling anything magical, right? It's just about service, experience, and then rate, right? Like, can you give your client a great deal? Can you give them, low closing costs? Does your loan meet their objective, right? Are you communicating effectively with them? When they call you, do you answer? When they have questions, are you responsive? They want to close their loan quickly. Can you close their refinance for them in 15 days, 20 days, make the process efficient for them, right? And so that's where our focus is. Again, it's client experience, right? It's how do you give your clients an exceptional experience, give them a great deal, and they become your marketing engine. Right, because then it's like my cousin, my brother, my uncle, this guy, my coworker. Hey, I had an amazing experience with Madison Mortgage. Call him. Call Shah or call one of the guys, John or Ben or Eric or somebody on my team. To get that experience. We have 126 5-star reviews on Google too. So like our website alone gets a lot of traffic and inquiries, and so we're fortunate to sort of we're busy. I mean, everyone's busy right now, but we're busy and we're still very purchase focused in terms of helping consumers to buy homes as opposed to just doing refinance. We're still like 70% purchase, which is important to us for longevity.
That's great. So as someone who's process focused, how do you analyze your process? Like, what are some of the metrics that you use to say, all right, we're doing great. What do we do to get to the next level? Like how do you keep, because, listen, I mean, you at the beginning of your career, when you went from, 4 to 5 loans to 10 to 15 loans, you analyze your process. What can I do better? And you talked about that, what can you do better? So what are the things that you do to analyze your current process and improve on it?
Yeah, that's a really good question. So a lot of it's about like instilling a process and then being able to measure. Right. And so to get a sense of like, how are you performing? It's not just like closed loan metrics, right? It's like, how efficiently are we? How fast are we disclosing loans? So an originator sends a loan, it gets a timestamp, and we know that within, our SLA is like 5 hours. We want to disclose the loan within 5 hours, right? Some loans are not feasible, right? Because we scrub our loans aggressively prior to disclosure to make sure it meet all the guidelines and we have all of the necessary documents. So sometimes a day, you're always measuring that. How long does it take to submit the loan? How long does it take until you get an approval? How long until you clear the loan? How many underwriting touches, right? So how many times you have to make your lender touch that loan before it actually got cleared? And so those are all things that we're measuring throughout the process, and we're using our technology to be able to measure it so that we can figure out like, how are we doing in this arena? How do we get better, right? How do we control the cost associated with each component of the process, right? Are we doing something that we can make an adjustment and tweak that sort of process and then get it done a lot faster and more cost effectively? How can we apply technology to make our process easier? Like simple things, like in the last week we rolled out when we automated our title ordering and appraisal ordering fully now, where when the orders get submitted, we get email alerts. When we get title and appraisals back, we get email alerts. All the stuff's already in our LOS. It's all uploaded automatically by the vendor, right? It's little things and little incremental steps, and you kind of build brick by brick. You're sort of building your foundation, you're building your house. And so that's where our mindset and focus is around how to measure.
But by the way, I don't think I've ever heard of a mortgage company. We interview a lot of mortgage companies. We talk a lot about their processes that had an SLA. I mean, that's yeah. I agree.
If you don't set goals to obtain, then you can't sort of measure. Your team doesn't know. Like, it's not just like the old school strategy of like, oh, well, here's a loan, I got a loan, and then you hand it to your processor. Like, you can't do things like that. You can't do 100, 200, 300 loans a month as a group. Doing it the old school way, right? Everything has to be sort of assembly line measured. That's the focus. And look, that's all the big players do it, right? All the big organizations are tracking and measuring, each stage of the process. And sort of, in order to grow, you need to be able to measure, right? You need to set goals and you need to measure against those goals.
So Shah, you and I agree 100%.
Yeah, right.
You have to know where you're at to know where you're going to go.
Exactly.
So and using
it has to be like quantifiable metrics.
Yeah. But it can't be lagging indicators. Closed loans, lagging indicator. It's too late by that point. There's nothing to improve. It's those leading indicators.
And a lot of it's about like just having a good team and having a good communications apparatus, right? So that that you're talking to your leaders and they're giving you feedback on what's working, what's not. I'm not just kind of trying to sit on top as the CEO. I'm in the weeds. I'm in the loans. Tell me what's going on with this. I'm not trying to process loans, but I'll deal with high level escalations, and I'll talk to my leaders in each group, in each department, and say like, hey, tell me what we're doing well. Tell me what we're not doing well. Where can we make improvements? And it's incumbent upon them to identify and measure their process and say, we need to make this adjustment. And so a lot of what we're doing and what's fun about the business is like trying to figure that stuff out. How do we tweak it? How do we make it better? How do we make an adjustment? And then measuring like what impact that has through the life cycle of the loan process.
All right, so give us an idea. What are some of the goals that you have internally? And maybe this is proprietary. Maybe I shouldn't be asking you this kind of question, but tell us actually what's a goal that you've set for Madison Mortgage that you want to see actually, your kind of, and I'm not talking about your obtainable, your reach for the stars goal.
I mean, the mindset when I first came into broker is like, oh man, I want to do 100 loans a month. And we're kind of doing that now, right? So, to be honest, where I really want to be, and maybe this will take me a couple of years to get there, is I want to do 1,000 loans a month, right? That's kind of like where I want to be. I want to do a couple $100 million a month in loan volume and be one of the biggest operations on the East Coast in terms of brokers, right? So, that's kind of the objective, and sort of everything we're doing is engineered or sort of towards that target, right? Whether we get to 1,000 loans a month and that's our sweet spot, or maybe it's 300 or 500, I don't know, but I'm just going to keep going until I feel like we're in a good spot, right? And so that's where my focus is. And I'm also very much focused on like making sure that my team's doing well and that everyone's safe and happy and enjoying a great environment and making money. And, it's not just all about me and company. I'm more focused on them first and making sure they're good, and then I'll be just fine.
So talk a little bit about that. Like, what do you do for your originators? To make them feel happy, make them feel like they're a part of this this monster that you're creating that's going to do 1,000 loans a month, within the next 3 years.
Yeah. I don't have a lot of originators, right? So I think that's what people sort of confuse is like I have like 5, 6 highly productive originators that push that type of volume. A lot of my guys are doing 15, 20 loans a month. I mean, I have multiple people doing over 20 loans a month multiple times this year, right? Yeah. And that sounds crazy, right? Like 20 loans a month, how? But we're doing it. We're doing it consistently. It's just about good process. It's about speed. It's about engineering. So look, my LOs love me because they know I'm transparent. The beauty of the broker model is it's transparent. I'll work harder than they will. I'm going to outwork all of them, right? And so they're doing great and they're making a lot of money and they understand the philosophy of speed and make less per loan, but give your client a great deal, and they're feeling it, right? Because the referrals are coming like crazy, right? And then it's the process and the tech stack, and hey, they're trying to hire and they want to hire another LOA, and it's like, okay, well, we're helping you, we're hiring them, we're training them, we're getting them ready, and then throwing them into your environment. So it's like everything's focused around, I don't originate loans, for clarity. I don't originate any loans. I don't compete with my originators in any way. Quite the contrary. I get referrals literally every single day, multiple times a day, and I'm throwing those loans around to my team and sort of helping them and supporting them. And that's where the focus is like, you know, if I can get every single LO in my company doing 20 loans a month, then I know I'm going to be in great shape, right? And so what do I do to make sure that I can achieve that goal? How do I make sure that they are doing well and they're making a lot of money and having a good experience, and they know that they have support, you know, escalation ability, right? It can't be all on them. It just can't be like, well, you figure it out. It's like, okay, well, what's the issue? You know, we'll take it, we'll run with it. Okay, we got this. We understand. We'll engage you when we need you. Otherwise, you go sell more loans, right? So that's kind of our philosophy. And so the people that come into the environment and subscribe to that and sort of get on board with it, they'll never leave. Because you can't do that anywhere else. And I don't care where you go.
No. So when do you hire an LOA? Like, how many loans a month is the point that you actually should be hiring an LOA?
There's no per month. It's really just more around like, it's not like, do you need an LOA because you write X number of loans a month? That's just a feel thing. If I see an LO that's going hard and is doing good production, but's getting caught up in certain things that, you know, I would say, like, if I had to establish a threshold, like once you hit 5-6 loans a month and you're doing that fairly consistently, 7 loans a month, it's like, and you feel the need for scale, usually the LOA is appropriate, right? And so we like to license all our LOAs. We like to train them first before we put them in the game. So, you know, it's just a feel thing. Every LO is different. Some people don't want it. Some people don't work well with an LOA. Some people use a heavy tech stack. They don't take any applications. Everything's electronic. So it just depends. It's specific originator to originator.
Any secrets to finding good LOAs?
Building them, not finding them, building them, right? This business is, look what's going on in our industry. Like, let's be real. Anybody who's doing any real volume in this industry knows it's really hard to find processors, really hard to find LOAs, right? People aren't looking to jump ship when things are busy. So there's the sort of silver lining of COVID is that there's a lot of really smart, talented, great people that were in other industries that we're so lucky, right? Mortgage is an industry that is sort of proven to be recession and now pandemic proof, right? So that's the beauty of selling.
Fueled, not proof, fueled. It's
fueled. I mean, listen, I think we were going here anyway with respect to rates pre-COVID. Yeah. I think this is the environment that was shaping up. I think it got accelerated very quickly as a result of COVID, but you know, this is kind of what I envision 2020 looking like minus the global pandemic. So there's a lot of talent on the street, and there's a lot of smart people out there who want an opportunity to join a great company and be part of a good culture. And, you know, everything we do is team and focused on helping each other and supporting each other. And nobody here is ever like, that's not my job, right? Those words don't come out of anybody's mouth here. So, you know, anybody who needs help is backing everybody up. And that's where our focus is, right? And so we hire a lot of great people. We've hired a lot of people actually since the beginning of COVID, and they're great. We love them. They're fam, right? So we're invested in them, and we're invested in training them and teaching them and growing them and helping them to grow in their lives, in their careers, both professionally and personally. And we have a great office environment. Everyone has a lot of fun together, you know. Yeah. It's good. I'm really lucky.
That's great. It's not lucky. That's not luck. There's a lot of hard work actually that went to create that luck. I believe Ben Franklin said diligence is the mother of luck.
Yeah. So, I mean, we're definitely working hard. We're definitely trying. We're definitely trying to grind it out and, you know, and to use this time wisely and intelligently, because we know that the next 2 years, 2.5 years are going to be really, really special in our industry. And so we want to try and maximize that as much as possible.
Fantastic. Listen, just to recap some things here. Obviously, we love the broker model. You love the broker model. We feel like the independent, independent mortgage company is the the right thing for the consumers. You talked about actually process. Making sure that you understand your process. It's crazy as it sounds. I don't think people understand that there is a process, whether they acknowledge that process or not. There is a process, and knowing that process is the first step actually onto improving it. Hire an LOA as soon as you possibly can. I feel like and if you're heavily focusing on the technology to do a lot of those things, but you see actually a lot of the top originators. It's very rare that you don't see actually a really good LOA supporting them.
Agreed.
And just technology, making use of the technology, and running the business like one of the things you said you run this like a CTO, like you're a CTO, and don't even touch loan applications anymore.
Yeah,
wonderful.
That's the fun stuff. That's the beauty of our business, right? And so it's been a lot of fun, man. It's gonna just get better, right? Like as COVID sort of starts to fade out, God willing, soon. I think it'll get easier and easier, and some of the overlays will come off that we're experiencing. And I honestly, personally think rates are going to go down more. So, how much, I don't know, but I get the sense like yields will improve, rates will drop, and it's going to be a good 2021 and a good 2022, and it's going to be good for consumers, for mortgage professionals. It's a good time to be in the business.
Yeah, fantastic, Shah. Thank you so much for coming with us, man. I really appreciate it. All right, everyone. Thank you so much for joining us for another Mortgage Leadership Outlook. Speaking of technology, we've got Joe Langner, who is president of Reverse Vision. Guy actually, was just a superhero in mortgage technology. Was a top executive at Ellie Mae. Was a top executive at a Fiserv company. Was Blue Sage most recently, and is now at Reverse Vision, the president. So keeping the technology theme going. Shah, thank you so much. And thank you all for watching. We really, really appreciate it. Mortgage Leadership comes to you live on Wednesday at 4 o'clock East Coast time, 1 o'clock Pacific time. Everyone, stay safe out there.
See you, buddy.